My name is Christian Philgraff, and I'm a partner at Cherry Beckert. I lead our government and public sector industry. Um, Today's session, navigating the world of indirect costs and maximizing grant funding, it's actually probably our most requested webinar throughout the year and session um, that we have, and it certainly was for today as well. We're going to cover the basics of indirect costs, including calculations, the process of negotiating with the federal cognizant agencies, and really focusing on the multiple ways that indirect costs can be leveraged to maximize grant funding. Really pleased to introduce our speaker today, who is, I think, without question, probably the leading person in this space in the country, managing director here at the firm, Nikki Latini. And just one more note on that, Nikki's having some voice issues, so I'm going to stick around and I will be reading the poll questions throughout. So with that, Nikki, take it away.
Thanks, Christian. Yeah, hi, everyone. Nikki Latini here. And as Christian mentioned, I'm dealing with a pretty gnarly cold, so I'm going to do my best, but I might have to take a sip of water here or there. So it's a pleasure to be here. I'm really excited to talk about my favorite subject of indirect cost, but just a little bit about me. I've been doing nothing but indirect cost for the last 23 years now. So I'm the weird one who loves this stuff. And so hopefully I can get you guys all excited about it as we get through this session. So I'm looking forward to it. And if you have any questions, you guys can put that in the chat and we'll do our best to get back to them. But I also say there usually is a lot of questions around this. So I'll say that if we don't get to your questions, we can also circulate those. I can do the answers still. So please make sure you're asking those questions and we will get back to you. Let me get my slide. I'll move forward. There we go. So for the agenda, we're going to kind of talk about direct and indirect costs, cost plans, indirect cost rate proposals, and why it matters. So first, if we're starting with direct and indirect cost. Oops, let me go back. Hold on. I got this. There we go. So one of the things I think that's the hardest thing around indirect cost is the fact that people have a hard time defining it. There's no one singular definition. So with that comes, obviously some of the confusion around it. So for me, I like to say that indirect cost is really that 30,000 foot view, and we'll get into that a little bit later. But if nothing else, and you guys hear or look at any part of this webinar, to me, this is one of the most important slides, really to understand the impact of indirect cost. So I like to talk about cost as true cost or the full cost of service. We always separate it as direct and indirect, and that unfortunately creates a situation where it seems that indirect cost is more optional. So keeping in mind that one cannot happen without the other. Indirect cost does not exist unless it has direct cost to support, and direct cost cannot function without the support of indirect cost. So really, we need to look at programs and services that we perform as what is it really costing us? What's the true cost of service? And I think because we're in the public sector and in government, it's kind of one of those muddy waters. It's not operating much like, it does operate like a business, but we don't look at it from the funding perspective in the same way. So it's really important that we take into consideration the fact that indirect cost is critical to doing your services. So if you think about it, you want a paycheck if you're working on a program. You need IT to support and to do your job. So to me, those are not optional costs. They are the costs of this program. So keep that in mind. So hidden costs, they're not easily identified. Sometimes they take an allocation methodology to spread it across different programs. And so it's typically subsidized by organizations simply because we don't identify it. So our indirect costs, our support costs are really sitting in the general fund. IT, HR, finance, all those things. We incur these costs. They are critical to doing our services, but they are hidden because they're kind of over on the side and not really working directly on that program or easily identifiable. So for many organizations, government, nonprofit, all of that, we have an average of, 25 to 40% indirect cost. And so if we're not looking at them and we're not identifying it, then you are subsidizing it. And keeping in mind that this is a zero-sum game. So the idea is these costs sit in the general fund, and if we don't identify them to our programs that we are supporting outside of the general fund, then the general fund subsidize that, which just takes dollars away from our public sector, our public service, our parks and rec, all of those services that sit in the general fund. Those are impacted if we do not pay attention to the indirect costs for the outside funds, because we're using taxpayer dollars and all of that to fund services outside. And that's really not the intent. So direct costs, I don't usually go into this that much because everyone pretty much has a pretty good idea of what direct costs are. And those costs that are identifiable to a program. So where they're on the front line, they're working on those services directly. So you can identify the people, if you have a building, different things that you're doing for those operating costs, you can identify those as your direct costs. So when I go back to the definition of indirect cost, I kind of look at it kind of like an umbrella. So indirect cost is that high level umbrella where their support is at the agency level. So regardless of funding source, they're looking at what are the costs to support all of the programs and services, not to support the outside. But then if we take it down one step further, we have that administrative or overhead costs. And again, why it gets confusing is we all kind of talk about it synonymously. We look at administrative costs, overhead, indirect, all is indirect, which they are in the sense that they're under this umbrella, but in the sense that they can be identified differently. So administrative or overhead costs, I kind of look as that one layer up from programs. So they might not support the entire agency, but they'll support a handful of programs or services that are being provided, like those supervisors or the different administrative staff that's supporting a handful of programs. Why that's important to be able to separate from the higher level agency-wide indirect is the fact that there are opportunities if you're looking at a grant, a federal or state grant, to charge those directly. So wherever we can charge indirect costs directly, we want to do that because there are some limitations in different grants in terms of the amount of indirect we can claim. And so if you're able to put it into the direct category, you can get that reimbursement back. And so then the indirect cost, as I mentioned, is that agency-wide. So we're looking at the finance, the HR, those services that are supporting everyone. It's really critical that we identify this so that we are making sure that we are looking at the full cost of this service. And wherever opportunities are, we want to maximize those revenues. So indirect cost is really important. So I know my graphic looks a little bit juvenile, but you'll get the point. So it really, if you look at a program as a glacier or an iceberg, what you'll see is the direct cost is really what you see, right? That's where you're seeing the services and the outward going of there of like, what are we doing? And that's what the whole world sees. Indirect cost, however, is holding up that direct cost. It's really important to understand it's the full iceberg, it's the full glacier that is necessary. Without it underneath, they would just sink. And so we really need to look at indirect cost in that fashion. Did you have a comment, Christian?
No.
Okay, you came on and I thought you were going to joke with me or something. But anyways, so we really look at this indirect cost as a critical piece again in holding up those services. So keep that in mind when we're looking at it. It's really important that we share this information with people, because I think the perspective out there is that indirect costs, we want all the dollars to go to the program. I hear that daily. And I think we all are in agreement that we want it to all go to the program, but indirect cost is cost that's going to the program. So understanding we can't do it without it is really important. So changing the narrative around indirect cost is what is critical for all of us to be able to support and really encourage the idea of sustainability and indirect cost. So to that sustainability and impact, what we like to do is look at, okay, the indirect costs, there's two different approaches, if you will, not approaches. There's two different ways of identifying indirect cost. We have our cost allocation plans and our indirect cost rates. And a lot of times they're talked about synonymously, however, they are different. So a cost allocation plan is that 30,000 foot view looking at your agency-wide indirect, finance, HR, all of those that are supporting every program and service in your organization. And then the result of that is an annual dollar amount per department, fund, org, of what it's costing to support the department or the fund. And then an indirect cost rate is just that next step. That next step tells us for every dollar you spend on direct, what is the indirect portion? And so we take the cost allocation plan or agency-wide indirect, we add layers of the departmental indirect, and then our denominator is that direct cost. And then we're able to say, okay, for every dollar we spend, let's say it's 30%, there's 30 cents of indirect cost. And why that's important is that's how we get it down to the program level. That's how we understand how to apply the indirect cost to every dollar you're spending. A lot of time people think they need to identify it or show it. Let's say you're applying for a grant, but really it's a percentage. And the idea is that it's all built into that percentage. And why this is important is for sustainability. We need to understand our true costs to make strategic decisions to move forward. Sometimes it costs more money to get a grant then you're actually having to perform on it. So sometimes it costs an organization money to get this money because they haven't identified the indirect costs accordingly. And then they end up getting themselves stuck in a situation where they're now subsidizing this grant. The impact is important. And so we need to know the indirect costs in order to achieve our maximum reimbursement opportunities and also the impact on programs. We don't want to get into a situation where we don't realize that we are spending so much or subsidizing so much of this program that we now need to drop the program and it never gets finished. So it's really important to understand, and the indirect cost is really that key component to open the door to understanding and to creating sustainability. Here's our first polling question.
First polling question. When was the last time you calculated an indirect cost rate? Was it last fiscal year, within the last 5 years, or never? I'll give a little commentary while, since we don't have background music for the questions, is Nikki and I've known each other for a long time, and I was in the budget and finance office at the state level. One of the things that I wish I knew then what I know now regarding some of the indirect costs and what I've seen happen over the last couple of years since Nikki's joined us has been the incredible results that clients have experienced just with working with us on their indirect cost plans and what it can do and what extra money can be brought back in. So I think it's something as we go through that. Feel free to ask questions in the chat. We do capture all those or in the Q&A, and if we can get to the Q&A during the session, we will, or later on. And okay, so here are results, but pretty evenly split between last 5 years and never. I've been surprised how many places have not done it in the past. And when I first started seeing some of this come up, but these are, I think these are pretty consistent, Nikki, with what we see just in our general client base.
Yeah, no, I think that's about right. It's pretty even across the board. You're not alone if you've never done one. I think a lot of times people are kind of scared of the process and the approach, and their thoughts are, oh, we'll just take the de minimis and that's fine. And, it's a good first step, but it's never the solution because the de minimis will never express to your organization what it's really costing. And so for many reasons, as I said, I've been doing this for 23 years and I've never seen a rate calculated that's anywhere close to that low as the de minimis. So like lowest rates I've ever calculated, and that's in a very lean nonprofit, maybe is like 22%. but governments are upwards to the 30 to 50%, to be honest, with all the different layers of support and services. And that's very common in, the negotiation process and what the federal government looks at and approves. And then the other thing that I always want to express is never compare one indirect cost rate to another. Bottom line is that you don't know how it's derived. You don't know what the base or the denominator is to another agency, and it's not a reflection of your efficiencies. So that's, I think, something that's really important to understand as we go about this, because a lot of people avoid the process because they don't want to put it out there that they have a certain indirect cost rate because they're afraid that their neighboring city or something will have something way lower. And it's just, you can't compare because you don't know what's included in that rate. Okay, so kind of to talk about a cost allocation plan first and give you a little bit more insight on that process is cost allocation plan started, gosh, probably 60, 70 years ago now. In terms of the federal government realized that they could not process all of the welfare payments. So they pushed it off into counties who were required to process and do welfare on their behalf. And there needed to be a way to identify what it was really costing them to do these services. So that's where the federal guidelines came into play. And it wasn't here for me to just have a job. So I always like to say that I didn't create this myself, although I wish I did. But anyways, it's the process of taking those central support departments are whose primary focus is to support the other programs and funds within the organization, but not to support the outside. So that's kind of how we determine what goes into the cost plan and what costs we're spreading. And then we spread those costs based on a series of different metrics, allocation bases to get down to the receiving departments, or the departments who are receiving that support, so that it can then in turn be built into the cost of what you are charging the public for services, fees, grants, all that. Cost allocation plan is often used in budgeting purposes. So when we're doing the budget, we're looking at what is it costing to support. And so for transparency purposes, if you think about an organization and if they were to just show in their budget book, which is what everyone does because we don't look at it in any differently. If you look at a pie of your costs within your organization, the general fund is typically the largest part of the pie. But in reality, it's really not. Once we've spread out all of these costs, then what you'll really see is the general fund would shrink because we'd be reimbursed for those services for the other funds that are taking that support. So when you're wanting to show the public for transparency purposes, you want to know across the board what is really happening, where are these costs really going? And so then it's a much better perspective than just looking at what the budget states, because the budget would just show you where the costs are incurred. It also then helps you with strategic views to improve your performance, your long-term sustainability. How do you plan ahead for services that let's say there's going to be in IT, there's going to be a large upgrade or a purchase of a new finance system. Where are those dollars going to come from? This helps you to understand that and look forward and run scenarios and do all of those types of things because it's looking at the entire organization. I kind of already went through what is a central support department or a receiving department. I just like to share that. So if I accidentally say those things through the process, you know what I'm talking about. There also are two different types of cost allocation plans. And so they should be used differently, and you should understand the difference between the two. So there's a full cost plan, and then there's this 2 CFR Part 200 plan. They are both, the approach is exactly the same. We follow the same thought process. We look at the functions of the departments the same and how we can allocate out those costs the same. But the difference is in how you use them. So a full cost plan is a little less conservative. It doesn't eliminate some of the costs that the 2 CFR does that they consider unallowable, such as the council. Let's say, any general government costs we have to exclude from a 2 CFR plan, but from a full cost plan, it really is part of the cost of doing business. And really is important to include. So when you're charging the public, you can charge them the full cost plan, not this more conservative one. And the full cost plan also helps to inform you, like, for example, property tax support. It's really important that the city would get their property taxes, or the county or whoever's getting the property taxes. It's important to understand that this is part of the business costs, or this is part of what we need to run our operations, the revenue. However, the support of that would be excluded in a 2 CFR plan. But in a full cost plan, we'd include that because it's a critical piece of running the operation and a necessary piece. So those are kind of some of the ideas. A full cost plan is also, like, we typically use budgeted numbers. And so it's a little bit more current, if you will, because in a 2 CFR plan, we're using actual dollars. So it's always 2 years in the rears. The 2 CFR plan is used for federal and state grants, and that's it. And that's all you should use it for. So if you have those grants, you're required to have a 2 CFR Part 200 plan. And what that means is that we have to exclude some of the costs. We have to use actuals. And then there's what we call a carry forward included in that. And that's basically truing up the estimate to the actuals once the year has occurred. So that's why we have to use the 2 CFR for those. Anything else that you're using in budget to charge, let's say, an enterprise fund, or if you're doing a user fee analysis to charge the public for fees that you guys, developers, that type of thing, you absolutely want to use a full cost plan. So methods that we must follow and that we do follow is making sure that everything that we're allocating out is reasonable, allowable, allocable, consistently applied, and documented. This is key. This is part of the guidelines, and this is the structure. Because a cost allocation plan is the generally accepted accounting principle for calculating indirect cost, meaning if you're ever questioned, let's say a developer wants to know where the indirect cost was derived, once they know that we have a cost plan that's following this methodology, they back off because it is that accepted process. You know, some agencies will kind of do it in the back office and kind of just lump all the costs together and maybe spread them on an FTE basis, but a lot of holes can be punched in that. And so what this is really just saying is that when you're spreading costs, you really need to look at the services being received, and you want to reflect that in the allocation basis. So for example, we're going to spread payroll costs, you're not going to spread it based on square footage because it's not relative. So it's not reasonable. So we need to make sure that it's relative to the service, and then that we want to consistently apply it across the board when we do that. So year over year, you're going to want to consistently apply certain line items across the board the same. We can always make changes, but then that's what you're going to talk through and make sure you document when you are going to make a change in a basis or anything like that. Kind of said this a little bit earlier, but the full cost plan we want to use for reimbursement for outside services, and then also for budget decisions and looking at what you can do. This really can be that tool that can help you project forward in understanding. So not only in the cost today and getting reimbursement back into the general fund for those services, but then also what's the impact later. So you can build in those costs to see what's on the horizon and how do we need to make sure we plan for that. And then the 2 CFR plan is that federal and state grant reimbursement. So one of the most important things is getting buy-in. You want to make sure with the stakeholders, the more people you talk to within your organization, the more people who understand the process, the better utilized the information is. So when staff participates in this process, instead of just doing it in the corner and they don't really know how it's determined, then they don't use it. But because, you know, we have departments out there that are going and getting grants, and there might not be talking to the finance department, them knowing that this exists, that it's out there, they understand it, will allow them the better ability to use it. So you want to always make sure that you're getting as much buy-in as you can. Many benefits of an approved cost plan. You guys will have these slides, you can kind of go over them, but mostly it's that one document that really covers all costs across the entire organization. It really helps you to understand that. And it's really, you know, you're not looking at different separate documents that have different layers of indirect. It's all in one place. It helps you to maximize your reimbursements and opportunities across the board. So that's a cost plan. So next we're going to look into an indirect cost rate proposal, because as I mentioned before, these are different things. And so I think it's important to kind of talk to the differences. So an indirect cost rate proposal is the step that follows the cost allocation plan. It calculates, it takes that cost allocation plan dollar amount for, let's say, a department, let's say police. The dollar amount there is part of the indirect cost pool, but then within police, there's also indirect costs. So then we take that next step with the departmental level of indirect cost, and that becomes our numerator. And this is the thing that allows you to then be able to apply it in different scenarios. So within the police, there's going to be different public safety grants and different things that they have. This one rate for the department can be utilized to charge across the board. And then this also helps for something that comes up in the middle of the year. You now have a basis to say, we're going to charge this fully burdened rate so that we are able to capture our full cost. So looking at how you do an indirect cost rate, it really is as simple. Once we've identified the correct amounts and the dollars that are allowable and what are indirect and direct, that becomes your indirect cost pool or your numerator. And then your denominator is direct project costs. Some agencies will use salaries and benefits. Some will just use salaries. So it's key in terms of your denominator that you understand what that is so you apply it correctly. So that's key. So when we're looking at an indirect cost, keep in mind, as I mentioned earlier, when you're when you think you should be able to compare one to another in another organization, think about this. You have, let's say, $500,000 in indirect cost, and that's your indirect cost pool, your numerator. Depending on what your denominator is, your denominator, if it's salaries and benefits, the rate's going to look a little bit higher because the number is smaller in your denominator, versus if you use total project cost, the denominator is bigger, so your rate looks lower. Same $500,000, same indirect cost that you're looking at, but the rate is different. And so that's what's important to understand when you're trying to compare, that the rate is different, that the same dollars are being captured in this process. So it's really important to understand that that is why you can never compare, but then also making sure that everyone understands what the base was, what the denominator was, so that we apply it correctly as we put it on the grants or any of the fees that we're doing. You don't want to take a indirect cost rate that was based on salaries and benefits as the denominator and charge it to your whole project, because then you're over counting for indirect cost. So that's the idea. The other thing to keep in mind is that you as an organization have the ability to charge indirect cost rates up to the indirect cost rate that you calculate and negotiate. And what that means and why that's important is some organizations avoid this process because they don't necessarily want to charge the full indirect cost rate. You get to choose where you charge it, how much you charge. You can charge one grant the full amount, the next grant half of it, another grant, whatever you decide that works for your organization, you get to have the ability to do that. And it does not have to be consistently applied to the grants, because of the fact that each grant, as long as you're not charging more than the rate, then you're never going to capture your full indirect cost rate. And the federal government's fine with that. If you don't want to capture and you want to still subsidize, that's fine. So you can pick and choose how you apply it. But I always recommend, when you calculate it true and actual, so you get the highest rate approved, so you have the option to be able to utilize that in the best way possible and the best way of getting as much as you can back. There are 4 types of indirect cost rates: the provisional rate, the final rate, the fixed rate with carry forward, and the predetermined. So the predetermined rate is very rarely used, and that's because it's really for a new organization. So let's say a new nonprofit came online, they don't have any basis for what their indirect cost rate is. So they need to have a few years to get that, so they can negotiate just getting a rate that they can use, but it's very rare. So the most common that I see in government is fixed with carry forward. And the reason for that is that you use the fiscal year that just closed. So let's say 23, 24. You're going to use that for 24, 24, 25, 26 fiscal year as an estimate. So you're estimating forward. And the reason why you want that is that you have 6 months to submit it. So now it's December. Let's say you have a June 30 fiscal year. Now it's December 31st, you submit. The federal government has 6 months to approve. So now you're at the beginning of the fiscal year that starts for 25, 26. So that's why there's that 2-year lag, but then you have it to use that entire year. And then for the idea of the carry forward is once you get to 24, 25, you're truing it up. A final rate is based on an actual, always looking back. So you obviously can't do a rate on actual until the actual year has occurred, and it would be used for the same year. So by the time you get it approved, you'd have to go backwards to get that reimbursement back. And then a provisional rate is just basically you have the opportunities to extend your rate for a couple of years, up to 3. You can request that if you don't want to negotiate on an annual basis. This is just something in terms of determining whether you need an indirect cost rate. You guys can look at that later. I want to make sure we're good on time. And then we'll go to our next polling question.
Great. So our next polling question, do you apply an indirect cost rate to your grants? So wait for your answer. You know, we're also getting some really good questions, Nikki, in the Q&A. I don't know if you've seen them or not, but
No, if you want to ask me one, I can say it while we're doing the polling question.
yeah, right. That's what I'm saying. Are there rules that require state entities to have a negotiated indirect cost rate, and so they don't use a de minimis rate?
So the idea behind a de minimis rate is the only way you can use the de minimis is if you've never negotiated. So if you're at a state agency and you all states have to negotiate a cost allocation plan, therefore it removes you from being able to use the de minimis. So in any other organization, if you've never negotiated, I mean, it could have been 15 years ago. And if you did it 15 years ago, you cannot use the de minimis. So
Great. Let me ask one more. Who gets to choose the indirect cost allocation plans, the grantee or the grantor?
who gets to choose them?
I think the question is asking who gets to approve it.
Oh, okay. So who gets to approve it based on your cognizant agency? It might not even be your grantor. Whoever your largest amount of funding comes from is deemed your cognizant, and that is the person responsible for negotiating your rate across the board. So that's who you would do there.
And then we'll come back to some of the other ones whenever we get to our next question.
Okay.
Perfect. So, Nikki, any comments on how the answers line up?
It's a pretty standard, I would say, 10% de minimis, which now, by the way, is going up to 15 in October. But again, I don't recommend. So, but it is. And then NICRA, I think it's a pretty good percentage for who's done the NICRA. So that's great. Okay, next one. Okay, so I want to give you guys an example that really hits home because I think it really talks to what I've been talking about as far as the impact. Now, this was a study I did many years ago when the body cams first came out. It was a big topic of conversation. The public wanted it for transparency purposes, and the police departments wanted it for protection and to make sure that people knew they were out there doing their job and how they're supposed to do it. So it was kind of both sides really wanted it. So there were a lot of grants that came out that really were to pay for the equipment to get them up and running, to get these body cams. So the police departments jumped on that. Sheriff, police, all these people were like, yes, we want this. The public wants this. Let's do it. The problem that happened is that there was no assessment done on what it was going to cost to support this ongoing. So yes, it bought the equipment. That was the least amount of the expense. So for example, we did this study and there was a grant of $500,000 to buy the body cams and get it up and running and set up with IT. What they did not take into account is what it was going to cost to support long term. and no one really even thought about that. So the biggest thing, if you can think about, is the storage of all of these 7 days a week, 24 hours a day of these body cams going off by officer had to be cataloged and stored. They have to hold it in, they have to keep it for 7 years. And so all of this was massive amounts of storage space on servers. And back then, you know, this was probably 10, 12 years ago or so, it was even more expensive for IT storage in the cloud at that time. So we had those costs. We had the staff that had to catalog and put all of these in. It increased the public records requests. And so people wanted to see these cams. A lot of people just wanted to see it for fun, like what happened here and let's see this. And then what no one realized is that someone had to sit there, watch the video, and blur out all the faces of everyone except for the person requesting the public records. So then it took time to have to actually blur out those faces. It increased attorneys' costs. There were more lawsuits. There was more things that were happening. So what ended up happening is on this $500,000 grant, it ended up costing $3.4 million a year to maintain. So the idea, so now that's a very drastic example. It's usually not that bad, but that was something where now they have all these body cams. They have to find $3.4 million or whatever they can to support that on an annual basis. And that doesn't mean you're not necessarily going to still do it. The idea is you want to be informed about that. So had they done the study before, they could have done many different things. They could have gone to council and said, hey, this is what it's going to cost. Is this something we can afford? B, let's put it on a ballot. What does the public want? Are they willing to raise the sales tax in order to cover the cost? Are we going to subsidize some? They get to ask these questions if they know going in. So the idea is that it's so important to do this assessment, to understand your indirect cost before you go after these dollars, because then you can make better strategic decisions. Like I said, it doesn't mean that they weren't necessarily still going to do it, but you need to know the ongoing costs of what these programs are incurring if it's something that you give out to the public and you don't want to have to take it away. So indirect costs, one of the big things that happened when the uniform guidance, the 2 CFR part 200 came out, the new one, like 2014, 15, was they allowed you now to use your indirect cost rate if it's negotiated as your match component. This was a huge thing for governments because a lot of times you don't go after grants that have a match component because you don't have the cash to set aside. So this is allowing you now, you don't have to set aside any cash. You use your indirect cost rate as the representation of what you're going to match on that. And why that's such a big deal is it's the federal government's acknowledgement that indirect cost exists, because what they're saying is that really is a match. You really are spending those dollars to support this program. So that is your component of your match. So again, back to what I was talking about as far as making sure that the rates are what they really are and that you're not afraid of a larger rate, is because if there's a match component, let's say there's a 25% match. If your rate's 35%, you can cover your full 25% and then still get 10% on the other side from the federal government. So you're maximizing the opportunity of those grants. This is just an example, and for timing purposes, I will make sure I'll just go ahead and pass this up. But basically, well, no, maybe I won't. I think it's important. So there's also an idea is most people will say, oh, well, there's a cap of 10%. So I can't get my full NICRA, whatever will I do? So if you're awarded, let's say for this example, it's a $5 million grant with $500,000 in admin that you can apply. You, through whatever purposes, timing, resources, whatever, were not able to fully draw down that $5 million. So you were able to do $2.5 million. So you got $250,000 in indirect cost. Well, you have the ability to maximize this opportunity or maximize the dollars that you can bring in by using your NICRA on that. So if you have a NICRA, let's say for this example, it's 37.5, you really spent $937,000 on that 2.5 million that you did. So you can draw down the additional $250,000 because that's what the admin cap allowed for. So it allowed you to do up to $500,000. So this is allowing you to actually get a little bit more. So you in turn were able to grab the additional 250 that was left on that cap. So by having that NICRA, it's such a critical point, even if there are caps. So I'll skip that one. Next polling question.
Yeah. What's your biggest challenge when it comes to leveraging a NICRA on your grants? Lack of understanding, intimidated by the process. That's always a good one. Not enough time, or concerned that the funding will be directed away from the program.
Okay,
So
Christian,
take a look at another Q&A that showed up. Can you explain the layers of indirect cost plans that might be done at a state? Where does a SWICAP fit into the state process with regards to other cost allocation plans and approved indirect cost rates? Great question. I just asked you this question last week.
that's a fabulous question. So the SWICAP is the highest level of indirect cost. So that's going to be like your payroll and all of that support all of the agencies. So it's the internal support agencies within a state are included in that SWICAP. Then you have all of your other agencies, you know, that are run through the state, which have all of the separate umbrellas. You will have that SWICAP will feed into your cost plan within an agency. Every agency should have their own cost plan in order for them to truly understand, because that's where you're going to then take it down one more layer within the agencies and have an indirect cost rate. And that is what allows you to apply it to programs and grants that you're receiving. So let's say emergency management. You're going to have SWICAP as part of your indirect cost pool. Then within emergency management, you're going to have your own administrative layers. So you're going to do a cost plan that supports all of the different programs and departments within your agency. And then you'll have indirect cost rates at the lowest level. And so by doing that, you have all layers of indirect in your indirect cost pool so that you can create that rate. And each agency would negotiate an indirect cost rate. You wouldn't have to negotiate the cost plan because the SWICAP has been negotiated already, and your departmental one will be reviewed when you're negotiating your indirect cost rate. So that's a great question.
So
Okay.
the results, those are interesting,
So,
but probably in line with what we normally see.
lack of understanding, and you guys, this is something I've been doing for so long, and I'm amazed by the process. And it is intimidating because people think and they hear stories of negotiating and all those things, but there really is a benefit. That first year might be a little bit harder, but once you get something in line, you it's more of an autopilot at that point, and you get a better understanding and all of those things. And then the concern about being directed away from the program, we've had that conversation earlier in the presentation, but again, it's changing the narrative. We have to be able to explain that these costs are part of the program, and you guys can make the decision to subsidize, but understand it's coming away from another program. So once we understand that, you guys can make the decision. Your organization can decide which one they wanting to subsidize, but something's going to get subsidized. So understand that. So do we want to grab dollars from the federal and state in these grants, or do we prefer to take some of our taxpayer dollars and take it away from our police and our fire and our parks? We make that decision. So just keeping that in mind. Okay. So why does it matter? So there are many different reasons why we care about indirect cost. It's that cost recovery, improved financial management, compliance, the increased revenue, and the match requirements. So for cost recovery, the idea is with that indirect cost rate, we have the opportunity to grab dollars from grants that you might have, let's say it closed already last year. If you didn't fully draw down on your award, you might have the opportunity to capture more. So the idea is anywhere we can, on any grants that we can, we want to make sure that we're maximizing every opportunity available. For improved financial management. So one of the things I know I hear a lot from people are they're afraid to do an indirect cost rate or submit one because they think that the funding agency is going to think it's too high and they're not going to be competitive. That's completely the opposite. So if you think about it from a perspective of, you know what it's costing to support this grant or this program, you know it going in because you've looked at your true cost of service, you understand you're making decisions. So you might be going after a grant that has an administrative cap. That administrative cap is less than your rate, but you still go after it. So the understanding is you're subsidizing. For a funder, if they know you are aware of what it's going to cost, you actually are a better candidate to make sure that you fulfill the expectations of the grant than someone who doesn't know. Because the idea is if you're going in and you're saying, I'm going to subsidize 100%, I'm putting it all to the program. Well, what if you run out of money? What if you can't figure out how you're going to compensate? Then the program falls apart. So from a perspective of a funder, we're all going to want to make sure that we're going after people that understand the whole picture. So it improves that financial management. It allows you to budget. It allows you to look forward, run scenarios, do all of those things. Compliance. You want to make sure that you're in compliance with any of your federal and state programs that you are operating. When you don't do the indirect cost rate, you're not necessarily in compliance for future funding. Sometimes they require it, if they are going to say you have to have an indirect cost rate, you need to make sure you're doing it. So you want to make sure that you are following those 2 CFR guidelines and that you are knowing what that rate is. Increasing the revenue. So going through your indirect cost rate process and approval will allow you to have an opportunity to increase your funding. So when you're putting in the budget for these grants and you're able to look at and apply for grants, you're applying for what the full cost of service is, so you don't have to worry about subsidizing it. So it's increasing the opportunities. In addition to that, for those fees and those things we were talking about, they have the idea of, if you're charging the full cost of service on those fees, you're bringing those dollars in. So having this information, having the indirect cost, allows you to maximize those revenues coming in. And then, as I mentioned, the match requirement, this is a really big one to free up those dollars, so you're not holding on to cash sitting in a fund somewhere until the grant period's over. So you really have that opportunity. So keeping in mind that there's no such thing as free money, we don't have our little money trees, and it comes with a cost. And so it's making sure we understand what that cost is and you're making strategic decisions around it. All right, the last polling question.
Yeah, last polling question. This is really where we wrap things up. And if you'd like for a team member to reach out to you today for after today's webinar, let us know if you would. We will follow up on all the Q&A directly with people that ask them. I don't know if we post all the Q&A and answer them as a group or not, but there's a few folks that were not registered, so it came in as anonymous. If you want to send them in, we'll provide contact information for Nikki at the end of this, and just go ahead and feel free to email and we'll get a response. Like I said, this is one of our most requested webinars. We do things several times a year on this topic, as well as speaking. Nikki speaks at a number of different conferences throughout the year and across the country. So it's a big deal, and it's, like I said, it's been amazing what I've seen with clients' results that we've driven for them on really, frankly, getting them extra money. I'm glad to know there's not just a money tree, Nikki, because I thought all the Amazon boxes that keep showing up at my house, my wife keeps telling me they're free. But anyhow, with that, this concludes our third session for today. So thanks again for joining us. Like I said, if you have any questions, please feel free to reach out to Nikki or to me. We'll get you the right answers and the complete answer for you, or a phone call just to talk about what you're doing. And if you have some thoughts or some questions, always happy to do that for you. We do value your feedback. I said at the end of every session, and ask you to do the survey at the end. It's really important that we get your feedback so we can keep improving them, program out our webinars throughout the year, and then again for this year, for this virtual conference for next year, how we want to do it. And just final reminder, please check the registration site linked in the chat for the next session today. Recordings for all of them will be available in about a week. And the next one begins at 3 p.m. in about 8 minutes, 3 p.m. Eastern. It's value analysis, a case study in driving customer value. Thank you very much, Nikki, and thank you all very, very much for attending and joining us. I hope it was as much value as we wanted it to be, and I look forward to seeing you or talking with you again soon. And have a great afternoon. Thanks.
Thank you. Bye.